Let's address the MF corner then, and today we're going to look at 5-star performers within the equity large and mid-cap funds. Dhirendra Kumar here as always. Dhirendra, the large and mid-cap category usually carries a slightly higher risk quotient. Is that how you would explain the last 1 year performance?
Not really, I would say that yes, it is a little more riskier than the large caps, but the kind of behavior we have seen from the large caps, it has been so. There are occasions when large caps are on a free fall and mid caps don't, or the smaller companies don't fall. But we have seen an extreme situation where mid caps have collapsed and large caps have held ground. And so in that sense, the diversity has paid off here. And last 2-3 months, we have seen the momentum in the overall category.
Dhirendra, the Reliance NRI equity fund is the best 5-star fund over the last 1 year. What's the strategy of this fund and how has it worked?
This is a very well diversified fund, and it has entirely kept away from small caps. It has not invested in any stock beyond, going below the capitalization of, 150 ranked companies on capitalization, I would say. That apart, it has a good mix of, growth and value. It has not, on one hand, it has Infosys as well as TCS. It has, Cummins. So when I look at the diversity, when I look at the orientation and diversity in terms of style, that seems to have worked very nicely for this fund. That makes it the best performing fund.
Let's address our first query then, coming in from Sai Shashank, and he wants to invest in a tax saver fund, Dhirendra, and wants to claim the benefits of Section 80C. What fund should he select, he wants to know.
Good that you're thinking of a 5-year time frame, though these tax saving funds come with a 3-year lock-in period, but one should normally think for a longer time frame when investing in equities, and these are nothing but equity fund with a 3-year lock-in which gets you the tax break. If I have to choose one of the three, I would say Reliance Tax Saver looks very interesting, the most interesting or the most promising one. And if I have to suggest something beyond this, I would say the Quantum Tax Saver, because everything else being equal, that's a well-managed fund. At the same time, it has half the cost as any other equity fund in India.
The second query, of course, is coming from Manish Kumar Ray. He has been investing in the 3-year SIP for the last 15 months, but he doesn't really wish to continue the monthly installments anymore. Still wants to stay invested in the fund. Is that possible, Dhirendra?
Yes, it is possible to cancel your future SIPs. And if you have, given an ECS mandate to debit your account by a defined amount every month for a defined time period, say for 3 years, then if you are just done with 15 months, the rest of the month you have to cancel it. Otherwise, the fund company will keep debiting this money and keep allotting you the units. Fill up the form, request the fund company to cancel the future SIPs, and it will take about 8 to 10 days to get it effected.